Welcome everyone to a new trading week. We've just surpassed the so-called London close on Monday. And I must say, maybe I'm being a little bit dramatic, but this week, and maybe I guess to some extent in the next week, as I see it, could be a very historic week in the euro's history, in the common currency's history. The price actually may not suggest it when it's all said and done, but just feel like we're living history right now. So let's talk about it a bit. We'll talk about the charts. But anyway, welcome to this event. Thank you as always to the fine folks at Epic Street for coordinating this event and making it possible. Appreciate that. Appreciate the opportunity as always to speak to a crowd like this. First, let me remind you the purpose of this event is education. I'm not going to provide trade alerts, not going to provide specific trade recommendations. I'm not going to say buy here, sell there. But I will provide a little bit of a look back at the trading day is now behind us. Take a look at what happened today, and we'll take a peek ahead at what the next day or two, maybe 3 or 4 days might bring. Hey Ray, you got to update your knowledge of the Fibonacci sequence there. Or wait, I don't think 345 is in the sequence. Commenting on Ray's 345 there. Anyway, folks, welcome. Euro up today. Okay, the topic I want to discuss at some point over the next 45 minutes. Maybe I shouldn't discuss too soon, but let me just ask the question. It's kind of a silly question in the context of a group of traders like probably many of the ones we have here who are newer traders. So before I ask the question, I'll say it. I recognize that many of you are newer to trading and are likely confused anyway. I'm not laughing. I'm emphasizing. I'm laughing with you, not at you, because number one, I've been where you are. I've been where you are before, confused about what the market's supposed to do or could do. And number two, in some ways, these are confusing times. These are very confusing times. There's days when the markets don't behave logically compared to what you think they should do or could do. But given that, especially for you more experienced traders, who's at least a little bit confused by price action in some financial markets, particularly like the euro or some of the bond markets or stock markets these days? Who's more than a little confused by what these markets are doing some days? Soul Man is. Yeah, Erwin too. Yeah, I want to discuss one example of how confusing some of these markets are. But I'll say that for a little bit later. I'm going to talk about something that's more technicals for the moment. Yeah, news in the euro. That's certainly euros. Not just the euro, but actually multiple currency pairs have been seemingly very jittery in response to news out of Europe, and not just news, but really rumors and comments from by this European official or news report about this development and with regards to the EFSF, the Rescue Fund in Europe. I mean, it's a very, right or wrong, whether you like it or not, whether I like it or not, it's a very Europe-driven market right now. I've been saying that before, but it's worth repeating. Well, let me take a look at the main currency pair, the main one being the euro. It seems as so many things, not just currency pairs, but many other markets, equity markets to some degree, are very correlated with the euro these days. Okay. Had to adjust something in the background. So we're going to take a look at the euro here. Going to turn off the auto scroll so I can back up this euro chart here. You know what? Actually, a proper view of the euro should take us first to the charts with indicators. Let me do that. And this chart on the right-hand side is one of the main charts I want to bring your attention. It's a little more difficult to see now, although you can see the high for the day. I'm looking on the right-hand side of the daily chart with indicators. You can see the high for the day almost matches perfectly, pretty much does actually, the daily 200 EMA. The kind of flat but recently downward sloping green line on this chart That's the daily 200 EMA. That seemed to define the high for the day. Now, that wasn't the only factor, but I would say probably the more significant factors. Now, if you want to know, what was another factor, let me take you to a, actually I'm going back to one of my interviews with on a chart, without indicators or lines and such. Some of my Euro charts are rather busy with lines and such. And I will get back to one of the charts that I've used in the past with, lines and everything, but what I want to show you is a chart without anything on it. A Euro chart, that is, without anything on it. Okay. So now I've got a daily chart without indicators, without lots of other lines. And I'm going to draw a line at today's high. Make sure I got today's high lined up correctly. 39.53. Let's do that. There you go. Got a horizontal blue line at today's high. Can you see how today's high is fairly close to number one, the high on September 15th, the high about a week prior to that, both of which I've just highlighted with red arrows, and the low from, and let me get the date straight, low from September 6th. So you can make the case for a bit of role reversal there. So daily 200 EMA and an area, in this case a so-called midpoint psychological level, 39.50. That seems to have had at least some bearing on price action in September, first half of September. So for the euro bears, there was a chance to short the euro in the vicinity of that 39.50 area for, arguably multiple reasons. I believe just before today's London Open. I say I believe because I don't recall exactly what time that came together, but that was a logical short. Now let's talk about the long on the euro for the euro bulls. What was the case for the bulls here? Actually, let me change this chart back. By the way, note the dollar yen very close to 76. Folks, still on intervention watch. Intervention watch for the Japanese yen. Real possibility. During my coaching session at FX Bootcamp today, let me show you what we had at about 90. Actually, you know what? Let me back up on this chart a little more. I am showing an hourly chart with some lines, no indicators though. And here's how the chart looked earlier today. Let me zoom out a little more on this chart. Apologies for all the lines, but I hope it can stand out for you. I've got a horizontal maroon colored line at 1.3825 in the middle of this chart. Again, horizontal, it's kind of a dark red maroon colored line on this chart at 1.3825. My cursor currently is very close to that line. My cursor is in the middle of the chart. You can see on the left-hand side of this chart the number of occasions where the euro turned from mostly up to down, or actually in one case from down to up, almost right at 1.3825. I mean, there is some history in the middle of this month of the 1.3825 area influencing price action on the euro. I want to make sure that's clear. So that area was important earlier this month. So in that context, let's go back to the 15-minute chart. So here's what we had earlier today. We had the drop in the euro. From the upper left-hand portion of the chart, that was the beginning of the drop in the euro once it reached that daily 200 EMA that I showed you earlier. So the euro reached the daily 200 EMA. Let me get the time right here. That happened about 45, less than an hour before today's London Open. Less than an hour before today's London Open, the euro reached its daily 200 EMA. In this context, it was a classic source of resistance, at least temporarily. The euro drops back below 1.39, which was sort of a ceiling for the euro in weeks past. Finds support at that 1.3825 area I just talked about a minute or two ago. And what I find interesting, and we talked about this in my live coaching session, what I find interesting is that the euro took off again from the 1.3825 area, starting minutes before the U.S. equity market opened. So what came into play here? An area which was support, which has been support in the past, has been resistance earlier this month, was support again before today's New York session open. Again, and around the U.S. equity market open. Folks, this is not the first time this year that the euro has bounced at support in the context of what's been, at least recently, an uptrend on the euro. Bounced at support around the U.S. equity market open, 9:30 a.m. New York time. And I don't know how else to describe the setup, but that was it. That was it. Along just above 38.25. Minutes before the opening bell on the New York Stock Exchange. Yeah, I do recall a fib level in the area. No denying that. But folks, I can't emphasize enough how much certain levels on this pair have had repeatedly had a notable effect on price action. This is not the first time a level like this has influenced multiple times price action on this currency pair. So that was the basic trade. Although we also discussed a case for shorting during the early part of today's New York morning session, shorting around 38.70. Now, why 38.70? Let me back out to show you that chart. Oh, by the way, the vertical blue line on this chart, that represents the U.S. equity market open, 9:30 a.m. New York time. That's the reason for the displaying that horizontal the vertical blue line on this chart. I want to back out a little bit on this, the 15-minute chart, to show you price action. Actually, I think I had this on a 5-minute chart. Let me go to the 5-minute chart here. Here's the 5-minute chart I showed earlier today. And I cast a horizontal orange line at 38.70, and I hope you can see now why I picked 38.70 as potentially significant. I'm using some arrows on MT4 to highlight some examples of the 38.70 area, how it seemed to come into play. So bottom line, there was a couple of, it was two logical trades that came together in today's New York morning session. Of course, there was the short. There was a short at the daily 200 EMA just before London opened. That makes some sense. You had some chances, one in early New York morning trading and one, some 30 minutes before the U.S. equity market opened. Wasn't quite 30, but something like that. So there's a chance to short around here, just below 38.70. Now, when I refer to the 38.70 level, I'm not saying you wait for a short at that specific level, but you can viably short, just like 38. Look for a short on a touch of, say, 38.69, 68, 67, something like that. So for you bears, there's a chance to short at 38.70, and at very least, you're certainly at break even and likely had some profit locked in that short when the euro reached its prospective support area at around 38.25, just before the U.S. equity market opened. So that short around 38.70, which we discussed before it came together, did pay. This didn't pay nearly quite as well, obviously, as the long in the 38.25 to 30 zone. And the profit target for the long, I should have showed you back on the other charts. I can go back to that. There was a daily R1 pivot point very close to, I believe, 39.45. And were there other trades, other currency pairs? Certainly, but again, virtually everything. Not exactly, but virtually everything was correlated with the euro. The pound dollar, for example, flipped from down to up about the same time and about the same way as the euro did. Going to back to the euro charts to show you the daily R1 pivot point. I'm looking at an hourly chart with daily pivot points. You see a thin, bright red line near the top of this chart. That's a daily R1 pivot point. That daily R1 wasn't far from the high established earlier today. So we reach R1, not long before the London close. That was a logical profit target. So say you're in around 38. Oh, by the way, I neglected to mention. I apologize for this. A daily and weekly central pivot point near 38.25 today as well. Today's central pivot point, I'm right at 38.25. At least my version of pivot points. Weekly central pivot point 38.19, not far below that 38.25 area level. So you have daily and weekly pivot points supporting the case for a long on the euro in that 38.25 zone as well. And again, we talked about that in our live class at Epics Bootcamp. So logical short, but and also even arguably more logical and a bigger pain long trade. Coco asked about intervention. Well, Coco, think about what Japan, in this case, what Japan's trying to intervene for. What are they trying to accomplish? Well, it seems that since they're targeting the dollar yen, usually they seem to be historically they've targeted the dollar yen currency pair. Well, in that context, if if they're trying to weaken the yen against the dollar, the currency that's usually benefited from that, at least to some degree, has been the dollar. And in my experiences, I've watched reactions to interventions on the yen. Usually, the dollar has gained some strength. So, for example, I recall seeing back in mid-September at the one of the first recent interventions. Japan last intervened in what was it, like the middle part of the prior decade, it's something like 2004 or whatever, when Japan was intervening earlier. But the more recent intervention started in about a year ago, mid-September of last year. Japan did an intervention. I recall when that intervention hit, and this happened to some extent also in more recent interventions. We saw dollar strength. I mean, not dollar strength nowhere near the same degree as yen weakness, as broad yen weakness, but dollar strength. So I hope that answered your question. And to some extent, you saw something similar when the Swiss National Bank was intervening to weaken the Swiss franc. You would see the euro, for example, rise to some degree across the board. Even though the Swiss National Bank's goal was to weaken the Swiss franc, their target for weakening the Swiss franc against the euro, so they were, to some extent, you probably could guess, buying euros. But Coco, let me be clear. It's not something I'm obsessing over. One of my least concerns these days is whether or not Japan's going to intervene. Now, could they intervene? Absolutely, they could. But and I can't blame anyone who's actively seeking to capitalize on an intervention type trade. And maybe it's at least some reason for caution. If you're trading one of the USD pairs during, say, the Asian session is the most common session where Japan has intervened. But, if you're looking for, say, trade that on a USD pair, that's not something I would. And I got to admit, the prospects intervention, it's really hit and miss. It's difficult at best to predict. But I will say this, there was an official at the Ministry of Finance in Japan today who made a reference to decisive action. I don't think he committed to decisive action, but he made a reference to it, that Japan might take decisive action. And that's a key word when it comes to Japanese officials. When they make reference to decisive action in some way, that it historically does raise the odds that they'll actually do something, whether it's intervention or some other sort of policy move. So there is a real possibility that Japan intervenes at some point. Although I gotta admit, they also made an announcement last week about some other measures to weaken the yen. Yes. So cocoa, well, not always, but in this case, yes. The purpose of intervention in the case of Japan is to weaken the Japanese currency. Japan as a net exporter, Japan derives enough of their growth from exporting, such that they don't want a strong currency. They want a weak currency. Exporters tend to do better when their currency is weaker. Japan's currency just reached last Friday an all-time high against the dollar. That's important because Japan exports a lot of stuff to the U.S. I believe, I don't recall the U.S. is the biggest destination right now of Japan's products, but it's one of the biggest. I say it's not one of the biggest because officially the U.S. as a country is maybe still a bigger destination. Arguably, if you throw all of Europe together, maybe I haven't checked, but last time I thought Europe was possibly a bigger destination for Japan's products. So yes, Japan wants a weaker currency. Most exporters do want a weak currency. In fact, the U.S. to some degree, at least, would argue want a weak currency. U.S. President Obama 2 years ago said that these, I don't know if it's still an explicit goal for the U.S. or for the Obama administration, but the U.S. Stated the goal a couple of years ago, or again Obama did, that he wanted to double exports in 5 years. Well, what's an easy way to increase exports? Weaken the currency. One way to weaken currency, how about quantitative easing? Which is what the Fed's been doing. So yes, intervention. Now there are some things that central banks do to seek to strengthen the currency. Iceland, for example, was a couple of years or so ago raising rates, not so much for inflation purposes, but I believe to strengthen the currency. I forget who it is. Is it Poland? I think Poland's was pursuing or considering pursuing some measures recently to strengthen their currency, the zloty. Poland's currency has been notably weak of late. I heard some chatter recently about Poland maybe looking to, or maybe they have. I just don't pay enough attention to Poland or zloty to be in tune with that. But I remember reading something somewhere about Poland possibly seeking to take moves to strengthen their currency. George, I won't disagree with you. Well, and George, you can also make the case that until Europe. Until the markets, really until anyone figures out what Europe's going to do, it's premature. Only not from that perspective, even. Well, and the effectiveness of intervention is debatable as well. But George, you can argue the case for or against it, and in terms of its historical effectiveness, nevertheless, central banks have continued anyway to do certain things that to many outsiders make little to no sense. So it's still possible. Still possible. You could also argue that if Japan loses credibility by sort of threatening intervention but not following through on it. And I will say this, Japan recently, I think it was like a week or two ago, I was reading that they recently increased their budget for interventions. Yes, the Ministry of Finance has a budget for intervention. They recently increased that. So now again, whether that's just a gesture to sort of spook the markets, who knows? But they have the pockets to do so, even if they perceive that it's going to be just the effects are going to be minimal or not very long lasting. So I spoke earlier about some confusion, or how I can perceive a lot of people being confused about the direction many financial markets are taking these days, especially the currency market. Well, let me bring back one of the guides I referred to several times in my live coaching sessions at Epics Bootcamp. I believe I referred to this certainly more than once in webinars here at Epic Street, among other places. And what I'm referring to is using the bond markets in Europe, the government bond markets in Europe, as a guide to the euro. So, for example, we've seen on and off for the past really several months, almost this entire year, and to some extent last year as well. I mean, I remember, for example, the first half of 2010, we were watching Greek yields closely, the yield on, say, the Greek 10-year government bond. And late last year, it was in the fourth quarter of last year, it was Irish government bonds or Portuguese government bonds. And increasingly this year, it's become, we've been looking for clues from, say, the Spanish bond markets or the Italian bond markets. Well, there's been one bond market in Europe that's made notable, that we've seen notable fluctuations in. I want to bring your attention here. Trader Ed, you could ask me. That's what I'm. Okay, you can do whatever you want. What you should now see is a website. Actually, let me post a link to this in the room here. This is from Bloomberg.com. And this is a graph of the spread or difference. It's commonly called a spread, but if you want to understand it more simply, it's the difference. The difference between the yield on France's 10-year government bond and the yield on Germany's 10-year government bond. German bonds are considered a benchmark for Europe, a sort of a safe haven bond market, government bond market for Europe. And so what investors and traders often do is they'll compare the yield on 10-year government bonds in other countries, such as France, such as Spain, such as at one point Greece and Ireland were compared to Germany as well. And these days, I'm comparing, I know others are comparing the yields on French 10-year government bonds to the yield on the German government bond. Well, what I find interesting is look at the spread or difference and how much it's changed just in the past few days. Let me go to a 6-month time frame from this if I can change it. Well, you know what? I'm gonna leave it here because 3 months isn't bad. My point is this: that spread or difference hasn't been very notable through August, September, and the first part of this month. Well, look on the right-hand side of this graphic how that spread or difference has jumped. In other words, what's really happened here is that French government bond yields, specifically on the 10-year, are just rising quickly, rising much more quickly than what we've seen in at least recent months. Now, can anyone tell me, traditionally, what does that imply for the euro? What would you expect the euro to do when French government bonds are being sold, when French bond yields are rising? Oh, but Johnny says go down and Terry says higher. Well, traditionally, it's not a perfect correlation between, say, French bond yields in the euro or Spanish bond yields in euro, or at one point earlier this year, we were watching Portuguese bond yields for the euro. Oh, I know. That's okay, Andy. No worries. But to simplify this, when I see yields like that on government bonds in Europe, especially for a major country like France, go up, I would expect the euro more than not to go down. Yields up, government bond yields in Europe up, generally speaking, the euro is going to be more down than up. Just, the opposite, it's an opposite or inverse correlation there. Government bond yields up, euro down, or vice versa. Government bond yields down, euro up. That's the general correlation. There has been the general correlation. Again, it's not perfect correlation as are many things that not perfect correlation, but when we've seen, let's put it this way, when we've seen sharp rises in things like the Italian, for example, let's go back to I don't have the graphic available to me, but I can describe it to you verbally. The yield on Italy's 10-year government bond started rising sharply in the second half of July, and that preceded a sell-off in European banks in early part of August, which then preceded as a notable sell-off on the euro in late August, early September. So make of it what you want, but here's my point. That's a concern for the euro bulls. This rise in the French-German bond spread, and that could be a sign of more trouble to come for Europe. Now, when it comes to explaining recently, in the past, couple weeks or so, when it comes to explaining the apparent divergence, if you will, between French bond yields and the euro, there's been a theory espoused by, I know I monitor, for example, the Zero Hedge blog, and I think they referenced Deutsche Bank and one of their analysts there. But, here's a theory, one theory that's being espoused by some as to why the euro continues to rise in spite of this apparent rise in French government bond yields, which you would think would put more pressure on the euro. One theory is that French banks, as an example, or probably not, this is the French banks, but the French banks are particularly heavily exposed to sovereign debt throughout Europe. One idea is that Eurozone banks, particularly the French banks, might be selling assets to raise cash as a means to recapitalize themselves. One of the issues being discussed by European officials is recapitalization of the Eurozone banks. Well, I don't sense that a lot of Eurozone banks are very enthusiastic about the kinds of recapitalization plans being discussed and proposed by Eurozone officials. So one way it seems the Eurozone banks may be starting to raise cash is to sell assets. And of course one of the assets they may sell is sovereign bonds. Here's my point. The rise in French bond yields may be a reflection of concerns about France and their sovereign debt rating, which can turn to relate to the problem with the French banks. What the French banks may be doing again is selling USD assets. The French banks may effectively be selling U.S. dollar denominated assets, and in selling those assets to raise capital, once they receive dollars for the proceeds of those sales of U.S. dollar denominated assets, they may be converting those dollars into euros, and that process of converting dollars received for USD assets into euros may be giving the euro a bit of a boost recently. And that's one theory being espoused for why the euro has been more up and down recently. And another theory is some maybe misplaced faith about Europe taking some steps in the right direction to eventually resolve this crisis. I mean that's fairly common. Anytime the European leaders take some sort of step in the right direction, even if it's a baby step, the euro has risen temporarily. Also, there's some chatter lately, and of course this chatter, if anything, was supported by some comments made late last week by a couple of members of the Federal Reserve. There's been some chatter about the Fed eventually pursuing another round of quantitative easing. So one theory being espoused in the marketplace by some traders and investors is that, if European leaders don't step up and do something dramatic, if European leaders don't provide some sort of shock and awe plan, and maybe that you'll have the likes of, say, China stepping in to doing those stimulus package or somehow supporting their banking sector, and maybe the U.S., specifically the Federal Reserve, steps in and does another round of quantitative easing if Europe doesn't step to the plate. Now again, these are all ideas. If you ask 10 different traders about what's prompting the euro rise, you'll probably get 10 different answers. If you ask 10 different economists, you probably get 11 different answers. Everyone's got an opinion. I'm only sharing with you what some of the issues, some of the opinions or the viewpoints that are being discussed right now. So Michael's got a question about the fundamental side, and we got about 8 minutes left in my scheduled time, so it's a good time to tackle questions. Michael, expectations for Wednesday. Michael asks about what's expected for Wednesday. Michael, you know what? My perception is Wednesday could be as choppy. Wednesday could be as choppy as what a typical European Central Bank press conference day is, where if on those days when Jean-Claude Trichet, the European Central Bank president, whose tenure ends this month, on days like that when Trichet doesn't say anything meaningful, doesn't say anything new, or if the markets, has to wait for a while for something meaningful to emerge from that press conference, the euro can be very choppy. Now, if we get something definitive, something more apparent, something more transparent or clear from Europe, good or bad or indifferent, the euro can move. I would guess this. It may not happen right away. It may not happen Wednesday. It may not happen Thursday. But I would guess in the next several days, sometime in the next several days, starting at earliest maybe Thursday, possibly sometime Wednesday. It wouldn't surprise me when it doesn't start until Thursday, that we'll get a new trend in the euro. Again, that's purely speculation on my part. I don't care if I'm right or wrong. I'll trade whatever the market gives me, but I see a possibility based on let's give you some perspective here. I'm not just throwing that out just to look smarter and make a lucky guess of it. Let's look at I'm going to go to another chart here. There's one date that stands out in my mind, July 21st. July 21st stands out in my mind. Now, does anyone know why that is? Why do I remember July 21st? Maybe I'm one of the only ones who remembers that. But I remember these dates in recent, Eurozone history. So I want to queue up a daily chart for the euro. I'm going to point to July 21st. There it is. That was a big day for the euro. You see that? I just highlighted with two red arrows in the upper left-hand portion of this daily chart for the euro. That was the day that Europe announced its latest revisions to the bailout, the rescue fund, and all that other stuff. So all the changes announced last time the European leaders convened and decided on a new approach to not just Greece but the broader Eurozone was that day I've highlighted with two red arrows. Now, it took a while. It definitely took a while for the Euro bulls to step in again, but they did. They did. Now, you could argue part of this was, the European summer and Europe, by many measures, kind of effectively shuts down in August. So that was maybe part of the picture there. Well, my point is this, in spite of that move by European officials, the problem wasn't fixed, and by many measures, arguably the problem won't be fixed after this upcoming summit on Wednesday. Hello, Dee. Welcome back. Coco, boy, I'm not sure I have enough time to answer that question. Coco, I suggest you go to the central bank websites and look through them. I know it's a very simple answer, probably a very insufficient answer, but most central banks have very comprehensive websites that can provide information like that. Well, for example, I know Coco, if you go to the ECB's website as an example. Go to the ECB's website as an example and do a search on their website for Securities Markets Program. Securities Markets Program. That's the ECB's bond buying program. And you'll get that should take you eventually to a web page where you can look at, report. Each week they report their holdings in the Securities Markets Program. That's their bond buying program. But Coco, you're welcome to do that. I encourage you to do that if you wish. But Coco, as I see it, what's the market moving more to these days? It's prospects or not for some sort of expansion of the EFSF, the rescue fund in the Eurozone, maybe to the degree, if any, to which the Eurozone officials are going to agree to a recapitalization of Eurozone banks. Folks, it's all about what's these European officials who gathered yesterday or gathered over the weekend are scheduled to gather again on Wednesday. It's all about what they're going to do, And again, even if they make a modest step in the right direction, it could help give the euro a lift. Whether you or I or anyone else believes that the eurozone is ultimately solved, it could still give a lift to the euro in the near to medium term. A bit of a short squeeze, you might say. Oh, George, I see you're already commenting about it. What would be counterintuitive? No, the French banks, if they're selling U.S. denominated assets and then exchanging the dollars received for those for euros, the French banks are flooding the market with dollars, not euros. George, do you follow me there? The French banks are selling assets denominated in dollars. The French banks reportedly are receiving. Well, reportedly we're selling. So if a French bank has an asset denominated in dollars, receives dollars for that, the French bank may in turn put dollars in the market and receive and use those dollars to buy euros, convert those dollars into euros. That process of converting dollars into euros is reportedly one of the things that may be giving the euro a lift. No, it's just so George, it's just the opposite, right? Taking dollars, converting them into euros. And sorry for the confusion there. So, folks, I'm running short on time, and I apologize for the. I'm not going to have time to cover everything, and I haven't done so well in keeping these webinars on time, so I want to try to keep one on time for a change and end in a timely fashion. So, feel free to ask, re-ask these questions tomorrow at the same webinar tomorrow. We're going to start at the same time tomorrow, but suffice to say this. Barring any rumors or any hints about what may come out of the summits on Wednesday, that's the key day. There's actually two key days this week. One is Wednesday, arguably the most important day with all these summits in Europe. I'd say secondarily, it hasn't had much of a lasting effect on euro price action, but we are going to see the first estimate for third quarter U.S. GDP. So the U.S. GDP report, I would say on Thursday, does pretty potential. It's probably if there's going to be any U.S. report this week that's going to move the market, it would be that one. But I can totally see a scenario on Thursday following the release of that U.S. GDP report where the dollar or the euro or whatever, even one of the NCROSs responds briefly to U.S. GDP, and the market could totally offset that response to U.S. GDP and continue doing whatever it's doing, if only because of what happens on Wednesday at these summits in Europe. Coco, loans, for example. Coco, you're asking questions that I don't think are so pertinent to your knowledge of what can move the market. Bottom line, Coco, is this. French banks, and not just French banks, but many banks in Europe, over-leveraged. They pursued too many risky investments, in some cases too many risky trades. Now they are undercapitalized. They have far too low levels of capital relative to their assets. So in order to raise capital, they're going to have to sell some assets. That's what right or wrong, that's what they're deciding to do. And I guess my greater point is this. I don't know if it is, but if the French banks selling assets and doing a kind of a forex conversion back to euros, if that's what's giving the lift to the euro, that's likely only temporary in nature. So, Coco, by the time if you did the research and get it all figured out, that effect in the market, if it truly is what affecting the market, is going to be gone. It's going to be gone. Again, it's some kind of thing historically has moved the market in a big way. Again, that phenomenon may help to explain, at least in part, some of the recent price action on the euro. Yeah, Dean, that's a real possibility. 140, 141, absolutely. Indeed, wouldn't it be interesting if we reached the 140 area, actually that whole zone between 140 and 1.41 around Wednesday? So, logically, actually, you know what? And I know I'm running a little bit over time, but let me go back to a weekly chart for this pair. Anyone remember this? I'm about to draw a trend line on the chart. A trend line. Positioning of that trend line is a bit debatable. That trend line could be interesting if we get that. This is a weekly chart, so where would that trend line occur? That's you know what? That trend line's closer to 142 actually. So keep that trend line in mind as well. South, in response to your question, the FX Bootcamp analyze fundamentals, yes. I'm probably the one currency coach that looks at the so-called fundamentals more than any other coach at FX Bootcamp. I'm not trying to play down the knowledge of the fundamentals what the other coaches bring. The other coaches do bring many, some of them even have impressively enhanced their knowledge of fundamentals over the past several months or even years. But I'm probably the one guy that I guess brings the broadest and maybe deepest grasp of fundamentals amongst the other coaches at Bootcamp. And folks, that about does it for me. Thank you for joining me. And again, sorry if my answers were a bit brief or incomplete, some of your questions, but I wanted to be respectful of everyone's time, trying to keep these sessions a little more manageable in terms of length of time. Listen, stay tuned. More to come. If you have a question that went unanswered, you would still want an answer to it, I'll try my best to address it tomorrow. Feel free to join us again tomorrow and ask the question then. But, I'll say the same thing I've been saying for what seems like weeks now. Watch Europe, folks. Watch Europe. And Wednesday could be a pivotal day for the euro. And let me clarify. Wednesday may not be a great trading day. Maybe because of the euro could be the markets could not just the euro, but broader financial markets could be very choppy because the market may be reacting to every little peep out of Europe. 1 hour we may hear something that the market buys the euros in response to. Another hour we may be hearing something from some German official that maybe the market decides going to sell the euro. I mean, hopefully, fingers crossed, hopefully we'll get something during maybe the London morning session, which gives traders reason to pick a direction on the euro and go with it. But be open to the possibility that it could be choppy until the market figures out what it wants to do with it. Yeah. So D, absolutely. Dean, we talked about it earlier before you popped in that I said I'm saying that this week and maybe to some extent the next week, but probably this week, this is probably going to be a very pivotal week in the history of the euro, in the history of the common currency. Now, it's not reason to load the boat one way or another even now. Because, again, it's arguably it's anyone's best guess as to what Wednesday's going to bring. Or even arguably anyone's best guess as to how the market will respond for the day or days after Wednesday's summits. Anyway, I feel like we're living history, so let's spectate and let's make money from it. Folks, have a great day. We'll see you tomorrow. Cheers.